right. Well, let's move on. Let's get chatting with the management of Ganesha Ecosphere. Remember, they went ahead and they raised some money via QIP route as well as preference issue. What do they want to use these funds for? Well, we have with us Mr. Yash Sharma, the director of the company, who joins us on the phone line. Hi, Mr. Sharma. Good morning and good to have you on the show. Well, could you give us some clarity about these funds that you've raised, 350 crores of QIP and 150 crores of preference? Could you tell us what will it be utilized for? And more interestingly, the rPET capacity that had moved from, I think, 14,000 to around 28,000. Where is that capacity headed by the end of this year?
Yeah, hi, thanks. Good morning, and first of all, thanks for having me here. So yes, we've successfully completed a QIP issue and a preferential issue totaling to around 500 crore INR rupees. And majorly, we've done this, capital raising to fund our future expansion plans and to also to have a war chest ready to be for us to be able to capture, these very exciting and very good opportunities coming up in the recycling space. So we are looking at increasing our recycling capacities and further entering into the bottle-to-bottle recycling capacities in the north of India. So currently the management and the board is already working on finalizing the expansion plans, and as soon as we will be ready to roll out with, we would definitely do an announcement as well. Coming to your second question regarding the bottle-to-bottle recycling capacity, yes, the current capacity we have now increased our capacity from 14 to 28,000 tons. And there's another expansion that is currently going on as we are speaking of adding one more capacity of 14,000 tons in the next couple of months, which will increase our total capacity to around 42,000 tons by the end of this year.
Got it. So 42,000 tons of rPET capacity, which enjoys higher margins. We got that. Your debt, the last reported number, I think, was around 600 crores. Now you're talking about expanding capacity, but there's also some debt in your books. So what will the peak net debt levels in the books look like?
So we expect to remain the peak net debt levels around the similar levels, at least for the next expansion round. So the next expansion is majorly going to come from these the fundraise that we have done and the internal accruals. So more or less, the net debt is going to remain at similar levels.
Okay, so net debt will remain at similar levels. Got it. So can you tell us a little more about what the expectation is for FY25, both in terms of growth? I know you've said that it could be in this range of 1,600 to 2,000 crores in FY25 and margins of around 16 to 18% by FY25. Is that something that you would hold on to? And
Yeah, that's right. We are still in line with our expected, targets that we had given out. We are still in line with that, and we maintain these exact same levels that you just mentioned, on line to achieve these targets.
The reason I'm asking you is because, both the sector has been facing a very difficult situation, the textile space that is, and you also have the exports which have particularly been under pressure, right? I mean, exports in the first half of FY24 have gone down over 30%. Any recovery that you're seeing in the export market at all, and how is the demand environment otherwise?
Yes, so there has been a little recovery in the export market itself, and particularly for us, also you are right that the general macro textile industry is still under pressure and it has started recovering now. For us, we are performing better than the industry just because of the fact that we deal with recycled polyester yarns and fibers, which currently being the strategy of many brands who want to now start utilizing sustainability as their strategic element. So because of that, we are still faring much better than the average industry's performance. And for us, we are also, what we've also done is expanded into a lot of value-added products, a lot of specialty products, specialized products, which are not available, or there's a scarcity in the market when it comes to them coming from recycled sources. So that is what has also allowed us to expand our margins and also maintain a healthy demand on our customer side.
Yes, no, I'm asking you about, I understand your comparison with your peers, but I'm trying to understand from a standalone perspective, the kind of fall that you've seen in the first half, is that something that will continue in exports in the second half? Any numbers that you can share with us on what the export growth, if at all, could look like in FY25?
We don't expect any material change in the export numbers. So to be honest, for us, we have balanced our decline in the exports with the domestic demand. And we think that currently the domestic industry is going to perform slightly better than the export industry for the next 1.5 year. And we think that the exports, they have slightly improved from the first half of 25, but they're going to remain at similar levels for the next coming up year as well.
All right, Yash, you're giving us a very wide range on revenues of 1,600 to around 2,000 crores for FY25. For FY26, I'm just looking at a note coming in from Antique, and they are talking about 1,900 to 2,000 crores for FY26 with margins of around 16.5%. Are those numbers gettable? For FY26, I'm talking to you because FY25, you're giving us a very wide range.
Correct, Nigel. So basically, the FY26 number is also what is very, very, very achievable. So basically, our major expansions will be online this year. And it's all a matter of, how fast we are able to achieve the utilization levels and hence the wider target, wider range that we've given you for FY25, basis on what level of utilizations and how fast we are able to reach. Once, we are at our peak or expected utilization levels, we'll be doing close to 1,900 to 2,000 crores of revenue, which will be almost flat for FY26, considering that, no new expansion plans, the new expansion plans would be coming from FY27 onwards.
Okay, so 1,900 to 2,000 crores and margins, because your B2F chips and your B2B chips as well will have better margins. So we should work with margins of around 16.5%?
That's right. Yes, sir. So they are a little better margins, and also as a strategy, we are also working to increase our margins on the recycled polyester fiber side as well. As I told you, I just told you that we are investing a lot in developing and marketing specialty products, value-added products, which were till now not available in the market with recycled material. That's what we have cracked, and because of that, we're getting healthy margins in our traditional, industry as well.
Got it. Yash, we'll have to leave it at that. Thanks a lot for joining us.